Hello, everyone, and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Stocks faced headwinds on Wall Street as investors reviewed a flood of earnings for the second consecutive week. About 30% of the S&P 500 companies have met or exceeded quarterly earnings expectations, setting the stage for market advance. However, those upward moves this week were kept in check after bond yields jumped to a 3-month high as investors scaled back expectations of additional aggressive rate cuts. We will now review key economic releases this week. Single-family home sales in September increased 6.3% from a year ago to a seasonally adjusted annual rate of 738,000. The median price of a new home inched up to $426,300, and the average price decreased 3% from a year ago to $501,000. In Europe, passenger car registration in September declined 6% from a year ago to 809,163 units. Passenger car sales declined for the second month in a row after falling 18% in the previous month, and sales declined in 3 of the 4 key markets in the region. Registrations declined over 11% in France, over 10% in Italy, and 7% in Germany, but rose 6.3% in Spain. The Bank of Russia increased its key lending rate by 200 basis points to 21% and signaled that policymakers are ready to increase rates at the next meeting in December. After the latest rate hike, rates are now at a record high, surpassing the previous high of 20%, while shoring up the ruble during the invasion of Ukraine in March 2022. The policy committee noted that inflation is running higher than previously estimated as the nation is struggling to adjust to labor shortages, the economy is suffering under Western sanctions, and there is a rapid increase in government spending. In other economic news around the world, U.S. durable goods orders decreased in September, and business activities in the Eurozone remained in contraction for the second month in a row in October. Spain's jobless rate dropped in the third quarter to the lowest level last seen 18 years ago. In Asia, China held its key lending rate at 2%, and new home bookings this week in 30 key cities rebounded 22%, following a string of monetary measures to revive property sales. In Japan, factory activities in October contracted for the 4th month in a row, and services index contracted for the first time in 4 months and fell to the lowest level since February 2022, as domestic and international customers held orders amid economic weakness. Tokyo area core inflation in October dropped below 2% for the first time in 5 months. Consumer price inflation, excluding food prices in the capital, slowed to 1.8%, and the price increase decelerated for the second consecutive month. Let us review key events in global bond, currency, and commodity markets last week. The yield in the 10-year U.S. Treasury edged higher to 4.21% after the latest economic data confirmed that the U.S. economy is resilient to higher interest rates, lowering the urgency for the Fed to trim rates. Crude oil prices gained 3% to $71.50 a barrel amid supply glut worries and a weak demand growth outlook for China, but elevated tensions in the Middle East weighed on the market sentiment. Natural gas prices in Europe hovered near 43 euros and 60 cents per megawatt hour due to escalating worries about a widening war in the Middle East and a colder weather forecast. The euro edged lower to a 2-month low of $1.08 after investors lowered expectations of aggressive rate cuts in the U.S. The yen weakened to 151.50 ahead of the national election on Sunday, which could prevent the ruling coalition from returning to power. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite struggled to extend the rally to the 7th consecutive week after 10-year U.S. Treasury yield jumped to a 3-month high. European markets closed down after rallying 2 consecutive weeks amid a mixed batch of earnings and a weak economic outlook. Nikkei 225 stock average extended losses to the second week as investors fear post-election turbulence could force the yen down to 160 against the U.S. dollar. Hong Kong indices extended losses to the 3rd consecutive week as investors awaited the release of large fiscal stimulus measures. Indian market indices declined for the fourth week in a row after a mixed batch of earnings and persistent outflow of foreign funds ahead of the U.S. presidential election dented market expectations. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Tapestry and Capri Holdings declined after a U.S. federal judge blocked a merger between the two fashion companies. Decker's Outdoor Corp jumped 11% after the maker of UGG and Hoka reported sharply higher than expected fiscal second quarter earnings and revenue. L3Harris Technologies, the defense contractor, reported better than expected results in the third quarter. Sanofi, WPP, Barclays, and NetWest gained after reporting better than expected earnings, but Mercedes-Benz Group fell after earnings plunged 64%, following the sales weakness in China. Tesla jumped 16% after the electric vehicle maker reported better than expected profit in the third quarter. Boeing declined after workers rejected a wage agreement between the machinists' union and the aviation company, extending the 5-week-long strike. Lam Research Corporation, the advanced semiconductor equipment maker, reported earnings ahead of expectations. United Parcel Service, the parcel delivery company, reported better than expected third quarter earnings and revenue, and domestic average daily volume increased by 6.5%. IBM declined 4% after the technology company reported weaker than expected revenue in the third quarter. Anglo American raised its annual production outlook for platinum and nickel. Aberdeen dropped 9% after the Scottish Asset Management Company reported a larger than expected fund outflow in the third quarter. Renault, the French automaker, reported a rise in sales in the third quarter and reiterated its annual outlook. Hermès, the French luxury goods maker, reported an 11.3% increase in sales in the third quarter. Michelin, the French tire maker, lowered its annual sales volume outlook. Renault, the French maker, reported rise in sales in third quarter and reiterated its annual outlook, as I mentioned earlier. In the busy week ahead, U.S. investors are ready to review non-farm payrolls, the JOLTS report, third quarter GDP growth estimate, and the PCE inflation report. Investors are also looking forward to quarterly earnings results from Apple, Microsoft, Amazon.com, Meta, Alphabet, ExxonMobil, and MasterCard. In Europe, the Eurozone GDP is expected to expand by 0.2%, and inflation is expected to hover near 1.8%. Third quarter GDP in France and Italy is expected to grow by a fraction, but contract by 0.3% in Germany. Unemployment in the euro area is expected to stay near a record level of 6.4%. In the UK, the new Labour government is scheduled to announce its budget on October 30th, as the finance minister plans to increase borrowing limit to finance infrastructure investment. In China, private and government service will shed more light on business activities in October. The Bank of Japan is set to announce its monetary policy decisions, and investors await the release of retail sales, unemployment rate, industrial production, and housing starts data. In addition, Tokyo stock markets could face extreme volatility following the results of the national election on Sunday. You can review daily U.S. global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see